Hi everyone, hello Finimizers. Welcome to another Finimize live event. I see the number of participants joining is increasing, so I'll just leave you guys a few seconds until everyone is in. My name is Stefan. I'm an ex-portfolio manager and I'm an analyst here at Finimize, and I'm very pleased to be hosting today's event on what to know about spot Bitcoin ETFs in 2024 with our partner today, Grayscale. I see it's still increasing, so let me just wait a few more seconds. But in the meantime, we can have some housekeeping rules to run through. First, answer the poll that will come up on your screen now. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. In terms of format, it's going to be a 15-minute discussion followed by a 15-minute audience Q&A. So, make sure to use that Q&A box to ask a question. And if you see a question you like, upvote it so it moves to the top. And that way we can get through the most upvoted questions first. There is no poll. Yeah, I think it should appear soon, the poll. Worst case, we can do it in the end as well. It doesn't matter that much. Let's kick this off. Our event partner for today is Grayscale, who enables investors to access the digital economy through a family of regulated and future-forward investment products. Founded in 2013, Grayscale has a proven track record and deep expertise as the world's largest crypto asset manager. Investors, advisors, and allocators turn to Grayscale for single asset, diversified, and thematic exposure. And today we're joined not by one, but by two members of the Grayscale team, Zach Pandl, Head of Research, and Ryani Sharif Askari, Managing Director and Head of Product and Research. Prior to joining Grayscale, Zach worked as a macroeconomist and market strategist at a variety of Wall Street firms, including Goldman Sachs, Nomura, and Lehman Brothers. I actually remember quite fondly reading your research back in the day, Zach. And prior to joining Grayscale, Ray was a director in the leverage finance distribution group at UBS Investment Bank. Over the span of her 10 years at UBS, she also held positions in the leverage finance and financial sponsors investment banking and leverage capital markets division. So I think it's fair to say you're in very, very good hands today. First things first, how are you both doing today, Zach and Ray?
Great, Stefan. Awesome to be here with you today.
I'm doing great. Excited to be on with you all. Thank you for having us.
Fantastic. Oh, I just see the results now from the poll. So what to know about, do you own Bitcoin or are you planning to in the near future? We've got 65% of yes, 7% of no, and 28% of I'm thinking about it. So hopefully by the end of this session, we can move this 28% to have a stronger opinion on that. Okay, let's set the scene with you, Zach. What's Bitcoin?
Great place to start, Stefan. And I just like to say at Grayscale and at Grayscale Research, our goal really is to move that 28% to help anyone confidently make decisions about investments in digital assets, giving them all the necessary information that they need. So a great place to start is, what is Bitcoin? It must be the most talked about and yet least understood asset in all of the financial system. Bitcoin is just an alternative money system that isn't created by a central bank. Most of the money that we're familiar with, dollars or euros, pounds, yen, whatever, are government created money systems. Bitcoin is just a money system just like that wasn't created by a government. And we have something like that already, and it's gold. Monetary gold has served that purpose for a long time. Bitcoin is just a digital alternative to that. Gold is something found in the periodic table, found in Earth's crust. Bitcoin is something that comes from a digital technology, something called a public blockchain technology, which we're happy to get in more detail. But I encourage everyone to just think of Bitcoin in that way. It's a kind of digital object that serves as a monetary medium, not created by a government, in the same way that gold in the past has served that purpose. Now, why would someone want something like this? So there's lots of different reasons that someone would hold gold or Bitcoin, but the primary reason is as a kind of store of value. Fiat currencies, government currencies, are run by politicians, run by central banks, and they can go up and down. They can have inflation and deflation that can affect the value of asset portfolios. In history, holding gold has been a way to diversify portfolios from some of those risks, from the downside risks to fiat currencies created by government policies. Holding Bitcoin is just a modern way to do that, a digital way to hold a store of value and diversify an investor's portfolio away from some of those risks. So at a very high level, that's what Bitcoin is. And again, we're happy to dig into more details as we get through the Q&A.
Yeah, and definitely easier to store than gold.
Yes, much easier to store.
Ray, why should investors consider investing in Bitcoin?
That's a great question. So I think right now, there's a lot of buzz around the asset class on the other side of the ETF. And so for me, I think this is just, and Zach touched on this is a new asset class and it's a unique asset class. And so from my perspective, when you're investing in Bitcoin, given the characteristics that it shares with gold, you're getting a few things in one investment, and that's kind of unique. So one, you do have, again, that digital gold narrative, the idea that Bitcoin is very verifiably scarce and durable, it's fungible. And so you have the opportunity to use it as a hedge against inflation, against currency devaluation, and you have sort of the use case as a super sovereign sort of currency. And it's also at the same time a means of payment. So it actually has a use, there's peer-to-peer transactions, and at the same time, you're also getting exposure to technological innovation. So as an investment product, from my perspective, I own Bitcoin because I get technology upside. I have an uncorrelated asset because it's part of a new asset class. It doesn't react traditionally to drivers the same way that maybe stocks and bonds do. And I have potentially a store of value investment.
Thanks a lot, Ray. So how to incorporate Bitcoin into your investment portfolio? And I guess linked to that, what are the pros and cons of investing in Bitcoin ETFs versus investing in Bitcoin directly, Zach?
Yeah, I can take that one. Building on Ray's comments, so we can kind of conceptually understand what Bitcoin is all about, why I might hold this. For the people on this call that are thinking hard about building portfolios, building the best possible portfolio, how do you think about incorporating Bitcoin in? I would just stress that Bitcoin is a high risk and high return potential asset. So if we think of our portfolios as, oversimplifying into two buckets, you have stocks and other things for capital appreciation. You have bonds, lower risk investment for, say, income or security. Bitcoin goes in that higher return, higher risk bucket. But a key feature is that it has a low correlation to public equities. So while Bitcoin can add both to return to a portfolio because it tends to have relatively high returns over time, it also adds to diversification because it has a low correlation to some of the other things that we're holding in a portfolio for capital appreciation. Now, when it comes to actually owning Bitcoin, there's a few different ways to go. Investors, didn't just start owning Bitcoin through the ETFs. Of course, Grayscale has been making regulated products in this space for more than 10 years. Broadly speaking, I think there's three sort of ways to go to own Bitcoin. One is on an exchange, just holding it on a crypto exchange of your choice. The risk there is exchange risk, as we've seen in the news over the last couple of years. Not every crypto exchange is equally secure. The second is what's called self-custody. This is sort of the magic of the blockchain. We can hold a digital object ourselves as long as we have our password or our private key. The downside there is that it puts some onus on the individual to be responsible for managing their own assets, not losing those private keys. And then the last way is through a security, through a security like an ETF. And of course, Grayscale thinks that this is the best way to hold Bitcoin. And a big reason is just for convenience purposes. Holding Bitcoin through an ETF or through a security structure allows it to be treated in exactly the same way as all of your other assets, all of your stocks, your bonds, commodity ETFs. Trading works exactly the same way. Taxes work exactly the same way. So it creates a very convenient structure for investors to access this product, and we think that that's why there's so much interest. So there are other choices, but we think that the demand for the ETF structure just reflects how easy it is for the average investor to access, and reduces some of these other risks or inconvenient issues of the other ways to hold crypto.
Awesome, thanks, Zach. Just a very quick thing to our viewers: make sure you ask. I'm sure you have tons of questions in crypto. Make sure you ask them in the Q&A box, not in the chat box, so that everyone can vote for and upvote for your questions. Now, this is probably the question that everyone is asking for. Where does Bitcoin and crypto broadly go from here? Maybe let's start with you, Ray.
Yeah, so this is a really exciting time. Again, we're on the other side of the Bitcoin ETF. We're seeing a lot of inflows, a lot of demand for these vehicles. And, I want to touch a little bit on, away from that, why it's just a really exciting time for crypto more broadly, for Bitcoin, for Ethereum, and what's going on really on-chain from a development perspective. So one big thing that's happening this year, which many of you might have heard of, is the Bitcoin halving. That means that the rewards associated with the creation of new Bitcoin are being cut in half. This is something that happens about every 4 years, and you're cutting the supply of Bitcoin in half. So that's something, just basically from supply-demand perspective, that's going to have implications, and that's something that's coming up. At the same time, there's a lot of development going on Ethereum. There's layer 2s being built. You've probably heard about ordinals. Things are being done on Bitcoin historically that have never really been done before, and it's really exciting. You think about the next largest asset in the space, you have Ethereum. This is something that's kind of underperformed other similar assets last year. This is a really interesting time for Ethereum because it's also scaling, it's growing up in a way. There's some upgrades coming up that are going to make it easier to build on and easier to use. So I think that, even away from the macro, which I know Zach is going to touch on, and away from what's going on around the financial product landscape, you have a lot of building, a lot of development, a lot of improvements to scalability that are happening on the major blockchains that are going to be meaningful for adoption and for user interface.
Maybe I'll tack on just a couple of comments after Ray real quick. The first is, I'd say, as Ray was touching on, crypto begins with Bitcoin, but is much broader than that. And it can be a sort of bewildering space for people to understand. We have an educational resource that we call Grayscale Crypto Sectors, which is a classification system and a way to really define the full spectrum of things that are happening in crypto, both the investable assets and how that relates to the underlying technology. So if you're starting to go beyond Bitcoin and trying to understand all this, Grayscale Crypto Sectors is a great place to start. Please have a look at our website for that. And just in terms of the price outlook, look, it's a volatile asset and there's plenty of uncertainty. But my background is as a macroeconomist, and so I tend to think hard about how the broader economic and market environment might affect Bitcoin. And so we're focused really on two main things. One is the potential for Federal Reserve rate cuts. Bitcoin is an alternative money system that competes with the dollar. So the Federal Reserve is cutting rates that may weaken the dollar and support the price of Bitcoin. Conversely, if the Fed decides not to raise rates, that could hold back crypto valuations potentially. So the macro is very important to watch. And then, of course, the U.S. presidential election will be a huge issue for crypto markets. Not so much the individuals who are competing, but the policy issues, how much government deficits and debt we can expect under either party, who will be naming the next Federal Reserve chairman, and what will they be saying about the inflation outlook? What is the U.S. role in the world? All of these things can affect the dollar and therefore potentially Bitcoin. So, we're very enthusiastic about where the sector is headed, where our industry is headed, of course. But crypto is now part of the bigger financial system, and all these macro factors can drive drive crypto valuations as a result.
Thank you very much, Slack. Okay, so we're 6:16. So now let's move on to the questions. Once again, make sure to ask your questions in the Q&A box, and make sure to vote for the questions you want to see answered first. So here, first question: doesn't the ETF destroy the essence of Bitcoin being decentralized? Do you think Bitcoin will be taxed in the future? So maybe Ray, you can start with that first part. I think you're on mute.
I think that at the end of the day, you have digital currencies and Bitcoin, which are digital bearer assets. You can think of them as like digital cash that you have that someone can just take from you, or you have to think about custodying. And so, no, I think that we're taking a new asset class. I don't think we're changing the decentralization of the underlying network or the ownership of the asset class. And we're just creating wrappers where investors can own these things in ways that they're comfortable, in ways that work within their portfolios and work within the traditional financial system.
I would just add one other thing to the Ray's comments, which is that the world's central banks store their gold in the basement of the New York Fed in Lower Manhattan. This does not change the fact that these assets can be held as a national store of value. And if needed, they can always be pulled out, as Charles de Gaulle famously did with France's gold held there at one point. So the same thing goes with Bitcoin ETFs. Just because they're in this convenient wrapper doesn't change the fundamental properties of the network. And if investors ever would need self-custody in some kind of crisis, they could always do that in the same way they can with physical gold. So I personally don't think it changes anything about the nature of Bitcoin.
You know, as an economist, maybe you can answer that second part. Do you think Bitcoin will be taxed in the future?
Well, Bitcoin in major market economies has tax rules in the same way that other things do. And so, again, holding your Bitcoin investments in the form of a security helps invest, through an ETF, through other Grayscale products. Helps exactly with these types of things. Investors are exposed to short and long run capital gains taxes, and with these products, and our product structures allow them to most conveniently do those things. What I would say is that if Bitcoin takes over global payments in a bigger way, you will see, I think what the question is getting at is, will governments try to stand in the way of Bitcoin adoption? And I think for sure, you will see that in the same way that in Latin America, when people have traditionally tried to use dollars, governments make rules to try to limit that to some degree. I think Bitcoin will be in demand for those same reasons. People will want to hold it as an alternative money medium, and governments will try to protect their fiat currency through rules and regulations in the same way that they do today against dollarization. Governments may need to write rules to protect against Bitcoinization in the future. I think that's just part of how currency competition works in international markets.
Ray, does Grayscale invest in Bitcoin directly or through futures?
Directly.
Because it was such a short answer, I will give you the gift of the next question too, which is not an easy one. Should we wait for Bitcoin to drop again, or is it a good time to buy Bitcoin now?
So yeah, look, nothing that I'm saying here is investment advice. And generally speaking, I'm not a big proponent of market timing. One of the things that I think has worked for many people, instead of just taking their full, amount that they want to put to work to invest and deploying it at once, you might think about dollar cost averaging. So every week or every month, investing a little bit. I don't know what's going to happen to the price of Bitcoin tomorrow, a month from now, or a year from now. But what I can tell you is that long term, I'm really excited about the prospect of this asset class of Bitcoin, of crypto, and I'm holding my Bitcoin for the long term.
Zach, do you recommend hodling as well?
Yeah, absolutely. Look, I just would encourage investors to think about crypto in the same way that they think about all their other investments. What is the right portfolio for your unique circumstances? What is the right product structure? Is it an ETF or something else? And what is the right way to access these markets? If you're a dollar cost averager when it comes to your stock and bond investments, that may make sense for crypto. If you're a more active trader, you think about it those ways. But crypto is just a part of the financial system. It's a new asset class, and it takes investors maybe a little bit of time to understand what's happening in our space. But it can be thought of in a portfolio context in exactly the way as everything else. And I just try to keep it as consistent as possible with how you manage your other assets. That's probably going to lead to the best results over time.
Yeah, and I think also investors can manage their risk through how they size their position, because a lot of people, you hear a lot of people saying, yeah, but crypto is too volatile. Well, just hold a little bit less. That's as simple as that, literally.
Right, a little goes a long way. Maybe I'll build on that point just a second. So we have done this more formal analysis of what is the appropriate amount of crypto for the average investor. Again, every investor is different. But for an investor holding financial assets that look like a 60-40 portfolio of stocks and bonds, then perhaps something like a 5% allocation to crypto can be approximately right to maximize risk-adjusted returns. So this is a volatile asset. I'm a huge believer in its potential over time, but a little will go a long way. In a portfolio context, this should be a part of a diversified portfolio, not where an investor should be putting all of their risk, of course.
Awesome, thanks, Zach. Ray, what's the pros and cons of crypto ETFs compared to solely trading the crypto? Well, I think maybe you can, I don't know if you have anything to add versus what's already been said.
Yeah, I don't think there's a right way. I think these are just options for accessibility, and it depends on the human being and what's important to them. So for instance, Grayscale products, ETFs, one can buy in their tax advantaged account, in their retirement account, in their IRA. Some people, that's not important to them. They want to own crypto outright. I think it really depends on not just even the person, but the vehicle that they're trying to optimize for. And I would guess, and I would tell you that I and many people that I know are investors. Some of them own crypto outright. They own Grayscale products. They own ETFs. These are all made to be complements. It's not mutually exclusive.
And another question linked to that, when will options be available on the new Bitcoin ETFs?
I don't know. That's a great question. Zach might have some views.
Well, with regulatory approval, I think the industry is looking ahead to that. I think we don't have any specific answers today. Grayscale has filed for a options-related product. I can say on this call, a covered call based strategy. So we are looking forward to the further development of the whole ecosystem around Bitcoin and these new products. And I think that we will see those innovations over time. But we, of course, need to wait for all the appropriate regulatory approvals.
As a UK investor, I believe I cannot invest in Bitcoin ETFs. Correct me if I'm wrong. What do you think the best stock investments or that can be aligned with the success of Bitcoin? Interesting question.
I could maybe pick that up. I don't have the full list of non-US crypto exchange traded products in front of me today. But it is the case that there is a large diversity of crypto exchange traded products or ETPs outside of the United States. So I would look at your jurisdiction. It could be available depending on what type of accounts you have, but certainly across continental Europe, there are lots of crypto ETP options available. I don't want to endorse any particular single equity here, but what I would say is that businesses that have a diversified exposure to crypto, maybe multiple different business lines in the industry, are generally going to benefit from growth in use of public blockchain technology, growth in the market capitalization. So those can be certainly reasonable investments to hold in the context of a portfolio.
Yeah, I see Volodymyr actually did endorse it a little bit more strongly on the chat, asking Coinbase with a question mark. I cannot endorse it, but I think it's, to be fair, a very fair play on crypto, I think.
Well, Ray and I are both comfortable spending our careers at a diversified crypto firm, so we certainly believe in the value of those types of investments. But again, I can't comment on any specific public equity.
Okay, I'm thinking of diversifying, and I'm definitely looking at this Bitcoin ETF. What would be the best way for me to do it? Can I do it directly, or do I need to ask my financial advisor?
I think that, again, this isn't financial advice, but, from our perspective, that's really your decision. If you're comfortable thinking about, taking a small amount, whether it's 2%, 5% of your portfolio and allocating it, that's something that I've done. So if you're comfortable, I think that that's something you can do. And of course, you can also speak to your financial advisor.
Now, a great question. It's been mentioned at the beginning, but maybe we can go back in a bit more detail. Please, could you explain the effects of Bitcoin halving in more detail? Ray, I think you had the first go earlier, so maybe you want to expand on that.
Yes. So when you think about how Bitcoin comes into existence, new Bitcoin are created through transactions. And this has been going on since 2009 when Bitcoin was created. And every 4 years, the amount of Bitcoin coming into existence is cut in half. The issuance rate is cut in half. And that's why we say Bitcoin is a disinflationary asset class. Or asset. So whereas you have other, when you have like a centralized currency, the government may, as a result of exogenous factors, print more money, monetary policy changes, they kind of have free reign to do that. The amount of Bitcoin that ever can be in existence is prescribed. It's set in stone by the program, and there can only ever be 21 million Bitcoin. And so over time, the issuance of Bitcoin has kind of gone like this. It's been a little bit, you can say that it's asymptotic. And every 4 years, the amount of new issuance that come into existence when a transaction is done, or when a block is added to the network, is cut in half. And so for all intents and purposes, from an investment standpoint, the demand side is not changing, or that we don't have a reason for the demand side to change. And you have half the amount of Bitcoin being issued than used to be, than will be before the halving. So I think that's the way that I think about it. The rate of issuance of an asset that is prescribed is systematically being cut in half.
Thank you so much. And a last question, and we've got Volodymyr again. Can you recommend any analytics tools for ETFs? For example, total value locked in ETF versus DeFi versus centralized spot futures trading volumes, etc. So any analytical tools for ETFs specifically?
So for ETFs as a general matter, investors should, again, evaluate crypto ETFs in the same way that they would any other product. So how much size is in these products? We don't use the term TVL in ETFs. That's a crypto term, but like assets under management in these products, trading volume is extremely important. Expense ratio, the track record of the firm, the expertise of the firm providing these ETFs. So, I think in the same way that you would evaluate any other ETFs, you can evaluate a crypto ETF. When you're looking at blockchain products, looking at Bitcoin or comparing it to Ethereum or other public blockchains, there are a variety of other fundamental metrics that you can use. Probably too much detail to go through in this call, but again, please have a look at our website, grayscale.com/research, if you want to start digging into more detail on how to evaluate the different types of products in our market.
Awesome. Well, Ray and Zach, to be fair, I would stay all day talking and learning from you guys on crypto, but I'm afraid that's all the time we have today. Thank you so much, honestly, for joining us, and I hope this has been very, very enlightening and informative for all of you. So you know, as you leave, also just don't forget there's a short survey that should pop up. Please take you know, just a minute to let us know your feedback and what topics you're interested in learning more about. Thanks again for joining. Ray, thank you. Zach, thank you so much. Both, see you at the next Finimize event. Have a great evening or day, or where, depending on where you are. Bye.